Well, welcome to the 2020 Illinois Farm Economics Summits. I'm University of Illinois Extension's Todd Gleason. I'll be your moderator for the day. Our panelists today include Gary Schnicke and Nick Polson, both agricultural economists. We're going to talk about farm programs and the crop insurance decisions that you'll be making for the 2021 growing season. Let's begin with the poll. We want to know, do you expect another CFAP or MFP program next year? So here is what we're hoping you will fill out. No, I don't think there will be one. Less than $20 an acre, between $20 and $40 an acre, or over $40 an acre. Do you think there will be another CFAP or MFP program for 2021 or next year? Go ahead and take a moment and fill that out, and we'll give you the answers as soon as we get about 70% done here. 65% of you have voted at this point. We're getting close. We'll see how things wrap up here in just a moment. Again, thank you for being with us for this third in our IFIS series. So here, 67% say no way, nothing coming for next year. $20 or less, 25% of you. 8% of you think you get $20 to $40, and nobody thinks there'll be over $40 an acre. So let's get started with the day. I think, Gary Schnicke, you are going, no, Nick Polson, you're up first. Is that right for the day? Nick, of course, agricultural economist here on the Urbana-Champaign campus of the U of I. Good morning to you, Nick. Thanks for being with us today.
Thanks for the introduction and kicking us off, as always. Todd, we'll give you a little outline here for what we're going to talk about today. Gary and I will go back and forth a little bit throughout the morning. But today's presentation, the first thing we'll talk about is the commodity programs, the Farm Bill programs that are operated out of the Farm Service Agency. So we'll do a little review so far of the 2019 crop year payments from price loss coverage and the ARC program at the county level. We'll do that for corn, soybeans, and wheat. We'll also take a look at some outlook for what to expect for 2020 crop year payments, and even look ahead to 2021 when we will be making another program enrollment decision. And then we'll also have a few comments on that individual farm level ARC program, say just a few things about that, things to think about heading into 2021. And then we're also going to talk about some crop insurance programs, crop insurance decisions for 2021 this morning as well. So we'll talk about individual plan use and then spend some time talking about some of the supplemental programs, the county-based coverage that can be added to those individual plans. Of course, most of us are probably already somewhat familiar with the Supplemental Coverage Option, SCO, that was introduced in 2014. And we'll talk a little bit this morning about a new supplemental program that'll be available in 2021 for the first time, the Enhanced Coverage Option, or ECO. So first we'll get started here on the commodity programs. If you want to go ahead and advance, and we'll start with some review. If you recall, earlier this year, back in March, we were, and the months leading up to March, we were trying to get information out about the 2018 versions of these ARC and PLC programs. Those enrollment decisions made back by mid-March of this year were for the 2019 and 2020 crop years. There also was a September deadline passed a few months ago for updating PLC yields. Looking ahead, the next thing that we need to be thinking about is the enrollment decisions for the 2021 crop year. So if you recall, in the 2018 Farm Bill, the initial decision was for 2019 and 2020, but then starting next year with the 2021 crop year, those decisions can change on an annual basis. You can move in or out of those ARC and PLC program options for your farms. And then moving on to just some review about what these choices look like. So the PLC program and the county level ARC program are both crop and farm specific decisions. So if you got base acres and multiple crop on a FSA farm, you can have one crop in one program, another crop in another. And that's a little bit different than that individual ARC, that farm level ARC program, where you'd be lumping all of the base acres together on an FSA farm. And that program operates on a whole farm guarantee, where you potentially have got multiple crops mixed in to come up with a combined guarantee and a combined trigger across those multiple crops. As I said, you can vary those decisions by FSA farm, just as in previous years. Again, we made that choice last March for the 2019 and 2020 crop years. The 2019 payments, if triggered, should have shown up here probably in October of 2020, October, November timeframe. 2020 crop year payments, if they're triggered, don't know that yet, will be received, in the fall, October, November timeframe of 2021. We're now into the yearly choice period. So for that 2021 crop year, we've got a March 15th deadline coming up, where we can make some changes to what we decided last spring. And just a reminder that your program is the only decision that you're going to need to worry about this spring. There's no more yield updating. There was no base acre reallocation in this farm bill at all. So your base acres are going to remain the same. Your PLC yields will remain the same. And both the PLC and ARC County program are going to pay based off of those base acres, and for PLC, those PLC yields. Moving on, we've got, again, just a little reminder about how this PLC program works, just so we're all on the same page. So PLC pays on 85% of your base acres, so that's where the 0.85 comes from. There is a payment rate that is positive if the market year average price for any of these covered commodities falls below what they refer to now as the effective reference price, and then you're paid that payment rate multiplied by your PLC yield, which is something that is crop and farm specific. I'm going to go ahead and advance that, Gary. The market year average price is a national price. So these things are based on the same price for every farmer across the country. The corn price that's used for Illinois is the same as the corn price that's used in Iowa, Indiana, outside the Midwest. And that's what determines the payment rate that's going to be the same for all farmers. Again, more reminders, the marketing year period that we're looking at is September to August for corn and soybeans. So we are currently in the 2020 marketing year. That started September 1st of 2020 and will go through August 31st of 2021. For wheat, it's a June to May period. So again, we're in the a little bit further into the 2020 marketing year for wheat. That started June 1, 2020, will end on May 31st of 2021. And then PLC, the other thing related to some of the other things we're talking about this morning, PLC acres enrolled in that PLC program have been eligible, will continue to be eligible for that supplemental coverage option insurance program that we'll talk a little bit more about later this morning. That effective reference price, again, that's what determines if PLC payments are triggered. Effectively, what we're looking at for reference prices is that $3.70 level for corn, $8.40 for soybeans, $5.50 for wheat. The 2018 Farm Bill did make some adjustments to the PLC program, so it's possible that the price trigger, the effective reference price, could move up from those levels, but that would require the 5-year Olympic average to increase to levels that don't seem likely, definitely won't be impacting 2021, don't seem likely to impact any of the remaining years in the 2018 Farm Bill. Moving on to a little review of that ARC County program. ARC County is a revenue program that pays based on a benchmark revenue guarantee that's measured at the county level. That benchmark revenue is a county level benchmark yield times a benchmark price, both of which are based on 5-year Olympic averages. One for the national price, the yield side yields at the county level, and then you're guaranteed 86% of that benchmark revenue. Again, related to some of the insurance topics we'll talk about later, acres that are enrolled in the ARC County program are not eligible for the supplemental coverage option. When we get there, we'll talk more about this. They will, though, be eligible for the new enhanced coverage option, which is another program that is a program that provides a band of county coverage somewhat similar to SCO. So some potentially confusing things there with farm program and crop insurance eligibility. The SCO eligibility is still tied to your farm program choice, but ECO will not be.
We got a question for you. What program are you considering for corn? ARC County, PLC, don't know yet, all acres, and ARC IC, and none. So go ahead and fill that out. I think there is a question maybe that you might want to answer at this time as well, Nick, if you happen to know the answer to it. So again, what program are you considering for corn? Are you wanting to do ARC County, PLC? Don't know yet. All acres are in ARC IC, or you're just not going to do any of them, which I assume means that you'll be in the, well, that is a good question. If you don't do anything, I suspect USDA will put you in something by default. It seems to me that may be PLC, but I'll let Gary and or Nick answer that question. So as we take a look, we have 66% of you who have voted now. And here are the answers. 21% say they'll be in ARC County, 22% in PLC, and half of you, more than half of you, don't know yet. Just 1% in ARC IC, and 5% say none. Nick?
Yeah, and I think those responses those percentages are good percentages. I'm glad to see that a lot of people haven't decided yet. I think that would be our advice at this point. And again, we'll talk a little bit more about that as we move along. There's still a lot of unknowns for 2021. Obviously, we're still in the 2020 calendar year. But let's start off, and we'll do a little bit of review here for each of the crops, starting with corn. We're going to take a look at 2019. Where we think we stand for 2020, which isn't determined yet, and then also for 2021. So starting out for 2019, what we do know for the 2019 crop year is that marketing year average price ended up at $3.56 per bushel, which does mean that we will see PLC payments triggered for corn for the 2020 crop year. Likely those payments have already been received. The payment rate is 14 cents a bushel, and I included what the PLC payment would be there, incorporating that 85% payment rate, so dollars per base acre there in the table, from $14 up to $21, depending on kind of where your PLC yields might fall. On the right there, we've got a map of areas where ARC County triggered some payments in Illinois for corn base in 2019. Highlighting the two counties where we saw payments exceed $51 per acre. I believe that's Schuyler County in west central Illinois, and then Lake County up in northeastern Illinois. You can see that there's a band of counties in northern Illinois there that did trigger across kind of the northern half of Illinois that did trigger ARC County payments. In a lot of those counties, we see ARC County support levels exceed what the PLC payments likely would have been, especially in those counties above $30 per acre. I think this outcome is largely consistent with what our expectations were when we were looking at what we thought 2019 might look like before we knew that price and those yield levels. Some areas, there was an ARC County payment triggered, and in some areas that probably was the program with larger payments. But by and large, all counties would have received PLC, and a lot of counties that PLC payment would have been the better choice in terms of payment size. Looking ahead to 2020, what we know at this point is kind of, we have a feel for what we think yield levels will come up at. Those FSA yields, those county yields that will be used to determine payments for the 2020 year, we won't know those until probably early next fall. That's kind of the timing of the rollout of the 2019 yields that we saw this year. What we know on the price side is the latest WASDE report. We'll get a December WASDE, I believe this Thursday, but the most recent WASDE report from USDA has a $4 projected 2020 marketing year average price for corn. The Economic Research Service also provides a futures-based forecast, which is not an official USDA forecast, but their model would be looking at about a 395, so pretty similar forecast for 2020. At those price levels, obviously they're above 370, so we'd be needing county yield losses to trigger ARC County, and we'd be looking at no PLC support for 2020. Obviously, those prices can change from those projected levels of around $4, but the most likely outcome at this point is, the expectation at this point would be that there would be no PLC or ARC County support for corn for 2020. And to the right, I've got a couple of screenshots of payment scenarios. The top portion of the table there basically plugs in kind of a trend yield of 225 per bushels per acre for Champaign, that 395 price. That shows you that neither PLC or ARC County would trigger a payment. And then in the lower table, I just did a scenario to look at how far those yields would have to come in below benchmark to trigger an ARC County payment. So again, yields we think are pretty good across Illinois for 2020. I don't think that's a realistic scenario there, but that's the kind of yield loss you'd need for 2020 to trigger a payment if we end up at that $3.95, $4 price level. And then looking ahead to 2021, which we have even less information about, we have no idea what the growing season will look like. The best assumption moving forward is that we have normal growing conditions, trend yield levels in 2021. The best forecast we have at this point comes from USDA's long-term baseline that they did an early release of in November, looking at about a $3.65 price. The market has moved up even since those projections were put together. So you might view that as even kind of a lower end of what we could be looking at for 2020. Then again, a lot can change between now and the 2021 marketing year. So that's very much a price projection. At that price level, we'd be looking at a very small PLC payment, 5-cent payment rate. And for that ARC County program, at trend yields, we would see no ARC County payments triggered for corn in 2021. You'd need a yield loss to trigger a payment, and that's summarized there, or a scenario for that's provided at the bottom there, at the bottom table. We'd be looking at yields needing to come in basically 30 or more bushels below benchmark for an ARC County payment would be triggered. That would be similar to what we'd expect from that PLC program right now. So overall, not a lot of support expected from either program. At this point, PLC would probably be the more likely program to make a payment for 2021, but a lot can still happen. All right, let's move on. Jump. Go ahead, Gary.
Just a note here. This is what you will. The 2021 program is what you will be signing up for by March 15th. So you will be getting the 2020 payments for what you signed up for, and we're thinking about the 21. So.
And Gary and Nick, when they sign up for both crops, right? Or for all three crops, corn, soybeans, and wheat. They've already signed up for wheat, I think, if that was the case. But they sign up for them separately. That's why we asked this next poll question, which is about soybeans. What program are you considering for soybeans? PLC, ARC County? I don't know. All acres are in ARC IC and none. So the question there is, will you sign up for PLC, ARC County? You don't know. All your acres will be in ARC IC. Remember, that's whole farm. So it would be for both corn and soybeans. Well, actually, all the crops, program crops, that is, or none. So go ahead and take some time and fill that out. We'll give you the answers. There we are. 8% say PLC, ARC County, 27%. And, well, haven't made that decision yet. 61%. I think you may have affected that decision there, Nick. I'm not sure. All acres are in ARC IC at 0% and none, 4%. So those are the poll numbers that came back. And now we'll go through the soybeans with Nick.
Yeah, I think that just reflects the astuteness of our audience. It seems like maybe they've been listening to us the last few years and have a pretty good feel for how these programs work. So, I think soybeans is an even more of a wild card unknown, especially what's happened with prices here. So let's take a look first at the 2019 experience with the programs for soybeans. Soybeans, it's even easier to talk about 2019. We had a marketing year price above the 840 reference price, so there are no PLC payments to even talk about. And ARC County paid out across a number of counties. Some of the biggest payments we saw over $50 per acre, right here where we're at in East Central Illinois. In fact, I think Champaign County there is the county that had the biggest ARC County payment triggered in 2019 there with $56 per base acre. Moving on to look at 2020, again, whatever you signed up for, as Gary said, 2020 payments will come from that same program you enrolled in last year. Again, on the price side, we're looking at a USDA official estimate, most recent from November of 1040, that ERS futures-based forecast of 1068. So again, in that same range, in the mid $10 range. At that price level, obviously there would be no PLC payments triggered. We'd need to see a $2 move down from that expectation before PLC would be triggered. And we'd need some pretty significant county yield losses if prices come in around that 1040 range to trigger ARC County. So at trend yields, that top table on the right, trend yields, 1040 price in 2020, no support from either program. We need to see yields come down, well over 10 bushels from benchmark levels, more like 15 to 20 bushels below benchmark before yield losses would be big enough to trigger an ARC County payment if we're seeing a marketing year average in that mid $10 range. So soybeans, I think it's kind of almost a tougher decision. Neither program is likely to trigger support. I think there's rationale for either choice in that case. But again, I think, we obviously have until March and things can change quite a bit over the next 3 months before that enrollment deadline. All right, let's move on to wheat.
No.
Oh, 2021. I forgot about 2021. 2021. So the longer term baseline price expectation for soybeans from USDA is $10 for the 2021 marketing year. So a little bit lower than what we're looking at for 2020, but even more time for that 2021 price to change from what we're currently expecting. Again, most likely outcome would be no PLC or ARC County support for soybeans in 2021. We'd need, big price movements down or large yield losses to trigger payments in 2021 as well. Similar to what I was talking about for the 2020 scenarios, we would need yields coming in, more than 10 bushels below benchmark, probably more than 15 bushels below benchmark in a lot of places in Illinois before we'd see an ARC County payment triggered if soybean prices remain in that $10 range. All right, now we can move on. So we've got 2019 first for wheat. Wheat was one of those crops that when we were making the enrollment decisions last spring, it was probably the easiest crop to pick a program, just given where we were at in the marketing year. 2019 was already over. We already had a pretty good feel for what 2019 payments would be. If we can advance to that first slide on the 2019 story for wheat. So we had a marketing year average price of $458, well below that $550 reference price. So a 92-cent per bushel PLC payment rate. And you can see there, in the 30 and upwards, close to even $50 per base acre in PLC payments, depending on what your PLC yields might be for wheat base. ARC County, obviously, with prices that low, even the ARC County program was triggering payments. In a lot of cases, those payments, and I've highlighted a number of those in that mid to high $30 an acre range. Those counties probably most likely are actually at the maximum ARC County payment, which is 10% of benchmark revenue. So that is actually a consideration for wheat. We are kind of in a range where hitting that maximum ARC County payment is a real possibility and did occur in a lot of places in 2019. Potentially larger payments from that PLC program. Again, PLC was by far the most favored program to enroll in for 2019 and 2020, And we knew that was going to be the case for 2019, and that's exactly what we see here with some of those payments across the state. Where we stand for 2020 is we've got a 470 November USDA forecast for that 2020 marketing year average price. That ERS futures-based forecast would put us higher at $5 per bushel. For wheat, either way, we're below that PLC payment rate and in the range where ARC County payments would likely be triggered, even if we come in with yield levels around trend, which anecdotally it sounds like corn, soybean, and wheat yields were pretty good across the state. So for 2020, even at that kind of benchmark yield level for Champaign County of 78 bushels, we'd be looking at a small ARC County payment over $40 on PLC though. And to get that ARC County payment larger, we'd be looking at needing yields to come in about 10 bushels below benchmark here. So 69 for Champaign versus the 78.5 bushel yield benchmark for 2020 to even get close to what that PLC payment looks like it could be. And at that point, we're actually hitting the max on that ARC County payment of $37 for Champaign County for wheat. So, looks like if we're in that 470 range like we expect right now, PLC payment will be the program that was the right choice in terms of payment size, and big ARC County payments as well, but bumping up against that maximum 10% of benchmark level. Looking ahead to 2021, so again, our USDA baseline, the best guess we have at 2021 this point is wheat prices coming up, but still below that $5 level, so something around $4.90. At that price level, again, a lot of time for that projection to change for 2021, but at that price level, we'd be looking at pretty sizable PLC payments again, $31 payment compared to around $40 this year for that Champaign County example that we see there. At benchmark yield, so if we have a normal yield year, ARC County would not trigger support for 2021. We'd actually need yields to come down somewhere below benchmark to trigger ARC County payments, and those ARC County payments would be maxed out there at about $37 per acre, at least in the Champaign County example, if we saw wheat yields come in, about 10 to 15 bushels below benchmark. So payments expected from both programs potentially for 2021. Obviously, the larger the yield loss, the larger the ARC County payment, potentially hitting that max. But PLC looks like at this point probably the better bet again for wheat base acres for 2021. All right, Gary, I think we got a few things to say about ARC IC, and maybe you can jump in here too. But ARC IC again is a FSA farm by farm choice that lumps everything in together and gives you a combined across crop whole farm guarantee. The big point on ARC IC in comparing it to the county level ARC option or the PLC program is that it does have a significantly lower payment rate. So you only receive a payment if they're triggered on 65% of your base acres rather than 85%, which in most normal years we think is a pretty big deterrent away from ARC IC. 2019, we talked a lot about ARC IC. It was a very important program in some situations because 2019 was so unique. There was a lot of prevent plant in 2019, which was a situation that lent itself well to considering ARC IC. And the fact that we were enrolling after we knew we had those prevent plant situations made it a much easier decision and something to more closely consider last March. I think looking ahead to 2021, that's not going to be the case. We're going to be making a decision for a crop year that hasn't started yet. And so, I think we'll see less interest in ARC IC. Gary, I don't know if you have any other comments to make on the farm level ARC option.
Yep. So just a couple of points here. We did have a question of what the status is of ARC IC payments for 2019, and you should be receiving those by the end of the year. In some counties, those payments have already gone out. One of the question was how ARC IC payments are calculated. We aren't, frankly, that would take about 15 minutes of our webinar today. I would suggest going over our ARC County Excel tool, which is a part of that item that Nick has been showing. There is an ARC IC, both single farm and multiple farm cases in that tool, and it pretty much hopefully lays it out pretty straightforwardly. Just one other point about 2019, we were signing up for ARC IC in a lot of cases on farms that were totally prevent plant. In that case, you knew you were going to receive the entire payment or the maximum ARC IC payment on those farms. That was when you were signing up. This year, you already knew the yields. Next year, you won't know that, or when you're signing up for the 2021 programs, you won't know that. And it's going to be a sort of a case-by-case basis then when you're signing up for ARC IC. Again, I would note that last year with prevent plant and late planting was a pretty unusual year last year that resulted in a lot of ARC IC enrollment that may or may not be, probably we'll see less of it in 2021.
All right.
We have, just by the way, this is directly from FSA. Yes, we are expecting ARC IC payments will be made in the next couple of weeks. So there you go. Thank you.
All right. So just to summarize kind of the commodity program, the ARC PLC section of today, again, be aware of the deadline, but we have plenty of time before that March 15th thing. We just wanted to get it on people's radars, provide a little review of how the program's worked so far, remind people that we do need to make a decision again for 2021 coming up here in March. We did get a question came in overnight prior to the webinar about, why do we need to worry about this? I don't think we do need to worry yet. I think being aware of it is good, and to start thinking about it is good, but I don't think we're advising anybody to go in and make your program decisions at this point, but it is something coming up to think about here prior to March 15th. That being said, some of the early advice for 2021, more information will come available. As of now, we've got the price expectations from USDA, but they're still very much a forecast. Best expectation we have now for 2021 on the yield side is just for normal conditions and trend yields. On corn, again, at those current projections, we've got a small PLC payment potentially forecasted. Probably lean towards PLC just where we're at right now. Again, that could change between now and March 15th. Soybeans, it looks like we're unlikely to see much support from either program. We need some pretty big price movements or very large yield movements on our county. I could come up with some rationale for either choice, but unlikely to see support from either program. Wheat's kind of the opposite. Both programs are likely to trigger payments, given what we expect for 2021 at this point. PLC's got more, upside in terms of the payment size and the amount of protection that could offer in terms of price declines, just because of that 10% cap that's built into ARC. And Gary just made a lot of good points about thinking about that ARC IC decision as a very case by case for 2021 and how it's different than the last couple of years. All right, so we want to direct you now to a few of the resources that we had created for the 2018 Farm Bill. We've got, obviously, the FSA website has program descriptions, program data on their ARC PLC program website. With the farmdoc team, we've got our Farm Bill toolbox and the Gardner ARC PLC decision tools that we've demoed in some of the webinars we did earlier this year. Those will be updated for the 2021 decision. That process is underway. You got kind of a sneak preview of some of that from the Farm Bill from the Excel spreadsheet tool that we're currently updating today with some of the screenshots and the slides. But those are some of the resources. And I think on the next slide, we've got, what those things actually look like on the web. If you find yourself on the farmdoc website, so on the left there, that's kind of the payment calculator inputs that you can provide in that Gardener tool. And then on the right is a screenshot from that front page of the Farm Bill What If tool. If you download that Excel tool that's also available at farmdoc at our 2018 Farm Bill Resources website.
And just a note here, Nick, that we are in the process of updating both of those, and they are not updated yet. We will post articles the minute they are updated, and we're expecting that to be done pretty soon here. Actually, on the Excel spreadsheet, you can continue to use it. It will give you estimates for the 2020 and 21 20 crop if you want that estimate. And we are adding that data to that. So just a note that those will be coming out soon. One other question we had is one of the questions that we had was, when will ARC IC be paid? And that will be in the next couple of weeks. And then another question is, do these tools work on PC and Mac operating systems? This payment calculator is a web-based tool, so it should work on all. And the Farm Bill tool does work on both systems. I use a Mac, and it works on that system. By the way, just so you know, there are some fast tools that do not work on the Mac, including the crop insurance decision tool, but this one does. So if you want to download it for that, you can use it there. I guess I should keep going. So we're now going to switch gears to the crop insurance program decision. So, and again, that on the March 15th deadline, and this will be the same at least through the 2018 Farm Bill, you will by March 15th have to make, or can change actually, your crop insurance and your FSA decisions. Crop insurance decisions will be made through your crop insurance agent, and commodity title choice will be made through by contacting FSA. On the crop insurance programs, we're going to ask you a question now. The new item this year is ECO. So here's the poll that we are asking you.
Final poll for the day. Will you consider enhanced coverage option? If you can fill this out, yes, no, or what is ECO? And they've got almost 60% have voted. So we'll see what happens. Most people wonder how many people we have online with us. About 500, I think, today, maybe a few more to begin with. We're dropping off at this point because we're hitting the noon hour. 60% say, yeah, they'll probably sign up. Consider it at least. 38% say no. And
here's just a graph of historic crop insurance use. This happens to be corn for Illinois. And you can see there that this goes back to 1989 and all the way up to 2019. What is the use of crop insurance? Actually, this goes to 2020. What percent of acres are insured by each product? And in 2020, 93% of the corn acres were insured with RP. And over time, the RP product has come to dominate that market and has been a steady growth up and probably has reached a plateau. Yield insurances went way down, particularly after the implementation of the revenue products. And in recent years, area risk plans used to be used on more acres, and now we can see that they're going down as well. So in Illinois, and actually this is the same across most Midwest states, Midwest states RP is the #1 product, and the same story could be said for soybeans and wheat. And Illinois and Midwest farmers seem to appear, by their crop insurance choices, you would say they prefer revenue products with guarantee increases and that are based on farm level coverages. Here, just to give you a feel for what coverage levels are selected, here is this again is for corn in Illinois. Here we're showing percent of acres insured by each coverage level. This would be for RP, and 85% of the coverage level accounts for 44% of the insurance use. 80% counts for 35%, and the 75% accounts for 16%. So the major coverage levels that get used for Illinois are those three higher ones. And there is a regional distribution to that. If we look at that, the 80 and 85% are used more in the northern and central part of the state, and the 75% and 80% get used more in the southern part of the state. We attribute that mainly to the size of the premium. If you go into southern Illinois, 75% coverage levels will be in that $14 to $20 an acre range, and if you go in central Illinois, those 85% coverage levels are in that higher, or 85% would be in that $14 range. So as we look at across Illinois, it's most premiums on these farm level products are in that sort of $13 to $20 per acre range. So that just shows you that in Illinois we're using a lot of pretty high coverage levels already. All right, so if we're looking at supplemental area coverage programs, we have SCO, which has been available since 2014. And this year we have enhanced coverage option. SCO, supplemental coverage option, is, and both of these are county-based revenues. So that coverage will go from, in SCO's case, 86% down to the individual coverage level of the RP or whatever product that you're using as your individual plan. So SCO would be available for RP with highest price exclusion, and YP. And again, you could buy SCO on top of it from 86% down to the coverage level of the, I'm going to use the word RP since that's the major use here. SCO can only be used on PLC acres, and we have 65% subsidy rate. All right, so if you bought an 80% RP policy, you could buy SCO and get coverage in a band from 86% down to 80%. So that'll give you a feel for what those coverage levels look like. Enhanced coverage option, and this is the one that is new for this year. It is a county-based revenue, again, similar to SCO, and its coverage mimics, again, just like SCO, the coverage of the underlying policy. So if you buy RP, which is a revenue product with a guarantee increase, ECO will be a revenue product with a guarantee increase. It provides coverage from 95% or 90%. That's the option. You buy ECO, you can get either a 90% coverage level or a 95% coverage level, and you will get it down to 86%. So you can think about ECO as an add-on to SCO, and SCO as an add-on to RP or the underlying product. All acres are eligible, so if you've chosen ARC County, you could get ECO. And here's the interesting thing about this, which we will talk a little bit here in a little bit. You don't have to buy SCO with ECO. So you could buy an ECO coverage and not SCO. Nick, take us through this description.
All right. Well, we got we put some figures together. This is a lot of times how these programs, these supplemental coverage programs that provide an additional band above your individual plan are described. They can be a little misleading. And Gary, just go ahead and click through them. At least, yeah, right there. So first of all, just a lot of examples on this slide, but basically looking at different combinations of 85% or 80% individual coverage in the green bars. So that's the percentage of your revenue that you're covering with your underlying RP policy. SCO then can be stacked on top of that. If you're buying 85%, SCO only provides you an additional 1%. If you're buying 80% RP, SCO provides you an additional 6%. SCO, the top is fixed. The bottom is determined by your underlying individual plan. So that can be as small as a 1% band or as big as, I believe, all the way down to maybe as low as 55% coverage if that's what you're buying on your RP. So that SC band can vary. If you want to go ahead to the next one, Gary. The ECO band then in orange, and go ahead and just click through all of those. Whether you're adding 90% or 95% ECO on that will affect how much additional coverage that ECO policy gives you. So from 90% down to 86 would be the 4% you see there, and the two examples on the left, and the two examples on the right would be the 9% band. That would be from 95 to 86%. So the bottom of ECO is fixed, and you can choose the top of either a 90% or a 95% trigger. Now, again, these figures are how we describe these programs. It's kind of how they're conceptually designed to add some additional bands of coverage to reduce what's left there in your deductible, the uncovered portion of your underlying individual plan. And I think there's one more slide here that focuses on what the deductible looks like. So, you know, you can reduce your deductible here again conceptually from 15 or 20% without these supplemental products, you know, to as little as 5% if you're buying SCO and the highest ECO 95% option there. But keep in mind, and we'll make this point again as we wrap up, that these are county-based products, so they're not providing exactly the same type of protection as your underlying individual plan. The price triggers are the same, but we're looking at county yields that determine these things, whether payments are made versus the farm yields on your underlying. So again, conceptually, the idea of these products is you can insure part of that deductible, but you're not directly insuring your deductible because it's a county-based product, not a farm level product like your underlying RP policy.
So we're going to go through a premium quote example. These are for Champaign County, Illinois enterprise units, and you can see there some of the factors we're using. These are preliminary quotes, so we don't know what these will be until the end of February. So the actual 2021 premiums could vary from this, but we want to give you a feel for what this would cost. And again, these are enterprise units, which would matter for RP. SCO and ECO are county, or you know, their entire farm here. All right, RP, we have premiums that range from 58 cents for a 50% coverage level up to a $14.52 premium for an 85% coverage level. Those premiums will vary by county, by trend adjusted yield, and the two factors that remain unknown will have a big impact on these premiums as well. So just so we know, and if you want to read more about this, look at today's FarmDoc Daily article, which is not up there yet, but will be by the end of the day. If you buy a 50% RP policy, you could get a SCO policy that goes from 80 or 50% up to 86%. That would cost you $7.53. As you move down the coverage levels, 85 or up the coverage levels to 85%, the SCO premium goes down because you're covering less of a band. The the ECO product then would be here $7.18 would be for a 90% brand or coverage level, which would go from 90% to 86%. And then $19.90 if you want to get a 95% coverage level. And you will note that there's a big increase from $7.18 to $19.90. If you think about it, 95% coverage level, you only need a 5% decline. So that's why that item is so big. If you're looking at soybeans, here's the same thing for soybeans. And by the way, as we were looking through soybeans and corn premiums, they do appear to have come down this year, at least for counties in the middle part of the state. $6.23 would get an 85%, and you could get a SCO from 86% down to 85% for 59 cents. ECO $4.95, and then 95% is would cost a $13.96. We're going to take an example here of an 80% RP policy and lay out some of the alternatives that you could look at. You could just buy, and these would all be available for every coverage level. RP 80% would cost $7.21. You could go RP 80% and have SCO from 86% to 80%. That would have a premium cost total between the SCO and RP of $11.24. RP 80% plus ECO from 90 to 86% would cost $14.39. And again, by the way, you don't have to put the SCO portion in here. And if I were thinking about it, I would probably think about doing that ECO coverage before the SCO, because that ECO coverage is likely to trigger, or will, there's no likely, will trigger first. And then just the combination of all three is $18.41. So you can obviously get some pretty high cost here. And we're looking at 90% here. And if we replace these examples with the 95%, we would go from $7.18 to $19.90. So just add more to this. As we're looking at this, here are some considerations that you might want to think about. The county basic coverage, you'll have basis risk, which means you will have county versus farm yields. The SCO and ECO bands will be based on county yields, and those have not been very popular, and getting less so in Illinois crop insurance, or the usage of those have been pretty low. Illinois farmers typically use high coverage levels for individual plans, and that really limits, if you're buying an 85% RP policy, there is a limited use to the SCO band. It's only 1%. The ECO does provide flexibility for higher coverage, so you could go from 90% and 95%, and there is flexibility to expand that county level coverage up to that higher level. And just a note on premiums there, you'll actually have higher cost, obviously, when you include SCO, and so those things are you'll have to consider. If RMA rated those products right, and there's not really any reason to believe that they won't, ECO will pay more out over time than you will pay in, but there is those high premium cost associated with that product. So that's sort of your the trade-off there. High premium cost, which will take a lot of the typical return that exists per year for a product, and but over time you should expect to receive more in that product than you pay in. Nick, you got words of wisdom here. And Nick has gone silent on us.
No, I was just going to say, I don't know if I have anything more to add beyond what you said, Gary, if you want to go ahead to the overall summary slide. I guess the last point there is, yeah, there's obviously with crop insurance, there's none of the adjusted gross eligibility or payment limits like we have for some of the commodity programs. So I think our overall summary, again, on the commodity program, kind of back to the first half of the morning, the outlook here, given where we think corn and bean prices will be in 2021, we're not expecting a lot of support from those ARC and PLC programs. We saw from the poll early on, and I think even in what Gary and Dale talked about in their webinar on Friday, and what we will be talking about in this week's webinar on Friday, that ad hoc support moving into next year is highly uncertain. And so, I guess I would argue at this point that crop insurance is pretty likely to be the main, if not the only, effective safety net that we're going to be looking at for 2021. So a lot of questions still remain on what those projected insurance prices will be when those are set in February. But historically, we've got the strong preference of the individual revenue coverage at high coverage levels, particularly in Illinois and the Midwest. And then, I think Gary laid out those SCO and ECO considerations pretty well. I think they're options to look at, given the limited support we expect from some of the other things, the ARC PLC programs moving forward. But I think the premium cost is going to be a hurdle to those, especially at the higher coverage level option for ECO.
I'd like to thank, by the way, all of our FarmDoc sponsors. They include the TIA Center for Farmland Research. That's at farmland.illinois.edu right here on campus. And you'll be able to hear from the director of that coming up not Friday of this week, but Tuesday of next week in the final IFAS series. Bruce Sherrick will join us. We'll have more on those in just a moment. Our other sponsors include Compeer Financial, the Illinois Soybean Association, Farm Credit Illinois, the Corn Growers Association in the state, Growmark, and of course, the Illinois, the Department of ACE here on campus. That's where Nick and Gary and all the rest of the crew belong. That's their department, the Agricultural Department, Ag Econ Department, and Consumer Economics. So thanks to all of them. Upcoming webinars again on Friday of this week. We'll talk about the post-election farm policy outlook. Jonathan Koppas will join us for that one. And then on Tuesday of next week, and both of these are at 11 o'clock, farmland markets and macro markets, and Bruce Sherrick will be along for that particular event. Pull that final slide up, make sure they know. They can drop a few questions in if they'd like, and we'll get a couple of these answered. I saw one that said, if a farmer takes no action on sign up, and we saw this, a few really intend not to do anything, apparently, what would happen? What would they be signed up for by default, Gary?
So if they are, they will continue. They will continue in the product that they signed up for last time. So it's a sort of just like crop insurance. It's a continuation product.
Also, will the online calculators include the SCO and ECO?
Yes, they will. Yes, they will. All right, so here's a couple questions. Can you buy ECO without SCO? Yes, you can. You can buy, so you can mix and match, which makes it sort of interesting. Again, if I were looking at that decision, I would probably think about buying ECO first and then SCO. The reason why I say that is because, or consider it at least, because ECO is going to trigger always first, and then SCO will trigger after that. Can a producer have both ECO and margin protection? No, they cannot. Can I buy an RP policy but then buy ECO as a yield-only policy? No, you cannot. If I am in ARC and have no SCO and buy ECO, then I have a hole in your coverage level, and yes, you will. You will have a hole, and Nick and I have thought a lot about this actually. You there, and Nick, get ready to say something here if you want to. But you will have a hole. So if you buy ECO and it goes down to 86% and you have a RP 80% policy, there's conceptually that hole there from 80 to 86%. I would note that it's you're sort of mixing and matching as well. The top part is a county level product, and the bottom part is a farm level product. So it's not yes, and a bit no as well. So that's sort of the wishy-washy ag econ way. Nick, do you want to add to that?
Yeah, I mean, I think the more we've thought about it, it's going to vary farm by farm. Some farms, might be in counties that, the so goes the county, so goes the farm, or vice versa. Other places we got a lot more variability where the farm doesn't match up. Individual farms don't match up with what the county average is, and that's going to vary geographically. It might vary within the county with individual farms that are on within the same operation. So there's that. I think one way we've started looking at ECO and the few weeks we've had to think about it is as a product that's really providing some higher triggered price protection. So view it more as a price triggered product rather than it will be a revenue product when combined with revenue, but something that could trigger some support if we see relatively small price declines relative to projected price. In those instances, the payments could be quite large because if you've got a price decline, that might mean yields are larger. So it's a product that we think will trigger payments quite often. Area plans, the historical looks I've given at those, a lot of times the payments are price triggered, and so that's just kind of another way to look at it.
Yeah, there are a couple of other questions that you might want to pick up, Gary. When on ECO, when does that pay out?
ECO would pay out the same time SCO would do, and they announced the yields, I believe, now in June of the following year. So it will take a while. It won't be paid in the year of so 2021. If you sign up for it, it will be, I think, June 22 before it's paid.
Anything else here? Well, there are a couple that you might want to read through, Gary, that have specific questions. Otherwise, I think we're pretty close to getting everything done. Oh, the ECO versus the private product band coverages.
Yeah, that's a good question. So, so there obviously are private coverages above 85% that many people have used in the past. I would expect those, and again, not looking at them, you would expect those to be higher cost because they aren't subsidized. But I don't want to say that without seeing the actual numbers itself as well. But these have subsidies associated with it that you would think would make the private products not competitive. But that isn't necessarily the case because some people some crop insurance companies will have their own rating systems, and they may disagree with that.
You'll update all of this stuff as it relates to the ARC PLC decision as we get closer to March 15?
Absolutely.
We'll be talking about it quite a bit in February.
Yeah. One question here. What about a 75% RP and then by 95% ECO? Yes, that is an option. And again, you can think of specific cases where you would do that. And again, we will cover more of those options. We'll be having more of that information as it comes out. Duke or Illinois tonight? Well, I'm projecting that Illinois will be #1 in the country, so I will predict that they will beat Duke as well.
Go Illini. Hey, thank you. I think we'll wrap it up there, guys. Thank you so much for being with us. And thank you to all of you as well for being with us online. Remember, we'll be back here on Friday at 11 o'clock. We'll talk about farm policy going forward. Jonathan Koppas will join us. That is Friday at 11. And then, of course, next Tuesday, we'll be back. We'll talk about the price of farmland with Bruce Sherrick. Thanks for being with us. Thanks to Nick Paulson and to Gary Schnitke. And of course, to Jim Maltz, who's been behind the scene making sure everything runs so well. You have a very good day.